Hey there, traders. Welcome to today's episode of Live Trading and Backtesting with me, your host, Christopher Ewell. Today, we're going to be talking about what's in or really what's not in my portfolio, taking some new ideas for trades that you might be interested in taking a look at yourself. And then be sure to stay till the end where we'll be taking your requests for live backtesting here right on the screen. And I am looking forward to getting into it today. So if you are looking forward to getting into it, make sure you smash that like button. Our goal today is 100 likes, and let's get started. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special lesson for you. I'm putting it here on the podcast because I really believe that this is going to provide you massive, massive value. And that's what I'm trying to do here. And hey, listen, if this podcast was useful to you at all, I really highly suggest that you go check out the full trading course at AIStockTradingSystem.com. That's AIStockTradingSystem.com. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021, so you can get access to right now at OVTLYR.com. That's OVTLYR.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. All right, traders, thank you so much for joining us today. My name is Christopher Ewell. I am the host of today's episode. Just to give you a little bit of background on me, my website is 10MinuteStockTrader.com, where we help investors of all skill levels take the guesswork out of trading in only about 10 minutes a day. Really, I am interested in showcasing a lot of back testing and the methodology that we trade on every single day. But really, I am concerned about this market out there. And if you are concerned as well, smash the like button because there are cracks under the surface that we have got to be talking about. So the first thing that I want to talk about here as I pull up my screen share is the heat map. All right. So this is today's heat map. It looks green. Everything's awesome, right? It's a fantastic day in the market. Nothing can go wrong. But if we look at the last week, it's like the exact opposite story. All right. Everything has been just smacked in every direction. And that is super concerning to me. When you think about how the market works, right? It's the sum of the components, but it's also a market cap weighted index. So if the components are all working together, if the pieces of the puzzle are all bullish and all moving forward, the index should be moving forward, right? Well, as we've seen over the last few weeks, the index has been pushing forward, but it doesn't have the participants, broadly speaking, to be making this move happen. And I really wanted to spend some time talking about the MMFI indicator. Now, you can take a look at this MMFI. Just Google MMFI price and you'll get it here. This is not something that's available in TrendSpider. I did send a support ticket to them, say, hey, put this on. But one of the things that I took a look at was I actually had a pretty strong losing streak over the last few weeks. And I was like, all right, what is going on here, right? I know my strategy works. I know my money management is in place. But something fundamentally out there is not working with me. What is it? So I'm doing some homework, doing some research, and I came across this MMFI indicator. And basically, it is the percentage of stocks that are above or below their 50-day moving average. And the 50-day moving average is essentially just a really easy line in the sand to say if a stock is bullish or if a stock is bearish. I'm not even interested. It's literally off my list if a stock is not above its own 50-day moving average. So what I did here is I took a look at it and I said, you know what? There may be something to this. I know earlier on in the year, everything was clicking and working and I was making money. Over the last few weeks, over the last couple months, just the opposite, right? And I'm like, let me do some back testing here. So I literally did a back test on my portfolio where if the trade was in a situation where the MMFI was above 50, or if the situation was below 50, I would either keep the trade in my portfolio because I keep a log of every trade, or I would remove the trade. Just say, basically a filter saying if it's above, keep it. If it's below, take it off. I could not believe the difference it made. It literally took my win rate up 13 percentage points. All right. And that profitability wise was astronomically different. Okay. I still kept all my winners and losers when it was above the 50. When it was below the 50, I just acted like they weren't there night and day in my portfolio. So I was like, I think I'm onto something here. So also keep in mind that if you're only trading when it's above the 50 line right there, you're actually trading a lot less, right? So right now I have no positions on, and generally the first third of the show is me talking about my positions. But what this shows here is that there are major cracks under the surface, right? Only 40% of the stocks in the S&P 500 have their own bullish trend going. And when, 2 out of 3 stocks are not working for you, it may not be the time to be going long. It may be the time to be raising cash. So that's something that I've been taking a look at. And really, I like to look at the market from a top-down approach, right? Let's start with the market. Is it in a bullish posture? Well, I wouldn't be saying that's the case right now. The way I define a bullish posture is if the 10-day exponential moving average is greater than the 20-day exponential moving average. And just to keep it easy here, that's the blue line and the black line. Right now, those two are almost talking to each other. I mean, we are just, if today had been a red day, those would have crossed down. So what does this tell me? This tells me, looking at the heat map over the last week, this tells me looking at the MMFI, the percentage of stocks above their own 50-day moving averages, and then taking a look at the market itself, I got to tell you, I think right now the best play could be holding cash. That may not work for you. You may want that excitement. You may want to be trading more than what we're talking about here, but that is the exact reason that you got to be able to be flexible, right? We're going to be talking about this more in the third half of the show, but trading is 1% execution and 99% patience. If the market is not working for you, don't be fighting it with your individual stocks. So, all right, I've pontificated quite enough on this point. If you liked that, if you like this analysis, if you have a similar idea, smash the like button. And be sure, as we're going along, in the chat box, typing in some stocks that you would be interested in seeing some back tests on. So as we go through, let me jump into the comments here. Breadth. Yeah, exactly. We really need to have this breadth going on in order to push this market forward. And that's what we're running out of. So let's do this. Let's move on to some new trade setups. Like I said earlier, generally I would go into what's in my portfolio, but the only thing you're going to find in there is a whole heap and pile of cash. And because of that, I don't have any trade setups to be talking about. So let's go to some new trade ideas that we have out there. How in the world could I be talking about new trade ideas? Well, there are some other things going on, right? So one of the tools that I advocate for is called FinClub.ai. It's an artificial intelligence platform, and here it gives you a lot of insight into what's going on with the market under the hood. Top of the page here, you will see the strong upward momentum. Basically, it's red light, yellow light, green light. And we have a green light for today. So if you were trading today, you would have had a green light here. Strong upward momentum. But in this section here, it does go through each of the different sectors. I mentioned earlier, start at the market, then find a sector, then find the stock. And the macro momentum, if we look at the historical on this macro momentum, I mean, even the artificial intelligence data that they have working with here has been just giving up, right? So yeah, again, there are cracks under the surface. But you know what? If you are interested in trading today, they did have a few picks that we could take a look at. First is MTCH. Let's take a look at MTC. Oh, I closed my charts. Give me 2 seconds here to open that back up. MTCH. All right, so this is Match Group. Oh, like Match.com. Cool. So here's one thing that I'm interested in, right? Let's take a look at their target price, which is 163.81, estimated ROI of 4.09%. And so they do have this limiter here, right? It says, hey, if you're interested, don't get in if it's over 161.38. It's currently at 158.89, so this move still does have legs. And it says over the next 4 to 8 days. So let's do a quick back test on this here. Now, I like to keep my back tests super, super simple. So we are only going to be looking at above and below the 10-day exponential moving average. And if we hit test and then see on chart, you can see the projection of that going forward, right? Now, what all does this mean? It's saying that based on the day it crossed over this 10-day, crossed over the blue line was here on September 3rd. After that point, it had a huge spike, and I bet it had to do with Apple announcing that they could sideload their payments there, which is a huge get for them. But also, this says, hey, you know what? Historically speaking, this is not an outlandish move. Going forward, this blue cloud says this is the lowest 25th percentile and highest 75th percentile. So this is actually a pretty normal move for this stock. And in theory, it could continue on up to 165 or so. So yeah, I like that trade a lot. This looks like a really interesting setup. Let's go to the next one. CDR. Cedar Realty Trust. Wow, this one has been really on a run. It may have already hit its target. High probability target 2156. It closed at 2228. Yeah, so that one hit the target and blew it out this morning. Let's do a strategy test real quick. Oh my goodness. So here's a big difference, and here's why I advocate for backtesting. And that's because when you look at the number right here, asset performance number, the negative 33.26%, that means that, hey, 1,000 candles ago, I bought this stock. Now, we don't have control over what happens when we buy the stock, but we do have control with our strategy. And that's exactly what this says here, is that this particular strategy yielded a 93.37% cumulative gain, right? It had a, where's my win rate? It had 46% win rate. That's the number I was looking for. 46% win rate, yet it had a 93% return cumulatively. So when you're looking at this, this is literally what, you know, the YouTube gurus on the internets, right? The one simple line indicator. When you buy above it and sell below it, that's kind of what they're talking about here. But in all reality, this says that historically, if you bought the stock when it crossed over the 10-day, you would actually do really well cumulatively, about 100% return. Now, let's do this and then blow it out on the chart. We can see what this looks like. Yeah, I mean, this still has some legs. It already hit this target price from FinClub at 2156. And historically speaking, we may see 23, 4, 5 out of this. So yeah, CDR has a lot of legs to go for it. One caveat. This does look a little overbought to me. And the way that I establish an overbought level is the second Keltner line. And that's this green line that hovers across the top of the stock prices. Now, the second Keltner channel there, that is taking the 20-day exponential moving average and then adding 2 average true ranges to that. So the average true range is how it moves over the course of 14 days in this case, multiplied by 2. So this really has blown out its average true range. So to me, this does show that it has legs to run, but it also shows it's overbought. We can take a look at another stock that recently had this happen, Netflix. Yeah. I mean, honestly, if you bought Netflix down here at 530 and took it off at 615, you are a huge winner. But also what happened here, right? It was overbought and continued to be overbought. And remember, there's that old quote, the market can stay irrational longer than you can stay solvent. So if you were trying to short it in an overbought situation, you just got wrecked. But in this case, it did come back down, and now it may be setting up again if you're interested in Netflix. So make sure in the chat you are dropping in your particular stock that you'd like to see backtesting on. We'll be doing that in the next segment of the show. But let's see here. Let's talk about some sectors, right? I like to look at the sectors. Like I said, look at the market, then look at the sectors, then look at the individual stocks. And underneath the hood of XLE, I had some issues. Okay, so let's look at XLE real quick. XLE, that's the energy sector, oil stocks essentially, right? And let's see on chart. Yeah, it's definitely in a bullish posture right now. Remove all execution marks. But it just today crossed over its 50-day moving average. So just today would I have even considered putting this on. But let's look at the components of XLE, right? So you got XOM, which had a monster day today. And it is not above its 50-day, right? There's a crack. Let's take a look at Chevron, CVX. It's not above its 50-day. It's even below its 200-day. There's another crack. So while the market may have some opportunities, there's still a lot of cracks that may not be filling in. So yeah, just word of caution out there. There are some opportunities to be had, but they're few and far between. And for me, I want to make sure that it's as easy as it comes. And by doing that, we need to have the breadth pushing the market forward. So in the chat, if you haven't already, put in one of the stocks that you would like us to do some backtesting on. And then also smash the like button if you found this useful, right? I love doing this. This is a ton of fun for me, but it really tells Benzinga that you're enjoying this whenever you smash the like button. All right, so let's go into the third section now, and we're going to be talking about your audience requests for backtesting. Okay, so let's go to the comments. Cryptomaniac, I appreciate you very much, sir. Bros, let's take a look at Bros. Dutch Bros. Oh, this just IPO'd. We can't run a backtest on something that just IPO'd. All right. So here's the deal. When something IPOs, it is best to let this play out for a few days, right? You can look at Robinhood, which IPO'd recently. Remove all my annotations here. If you were a bot on day one, you would be up, right? But if you had bought on day 4, you would be way down, massive. So it's best to let the market play itself out. Let it tell you what direction it's going to go, because we don't know. I don't know. You don't know. We can all think we know, but we don't know what's going to happen until this plays out a little bit longer. So for Bros, this is one that I personally would say put it up on the shelf. Maybe come back to Bros later on. Thanks for that, Cryptomaniac. ID Doc, can you check? Oh my gosh, look at this. Coming to town with a multi-part question. Let's do it. QuantumScape. All right, so QuantumScape. There's a couple of issues with this backtest, and I'll tell you what it is. This dark green line right here is the 200-day moving average. And first off, it's below there. And a good rule of thumb is that nothing good happens under the 200-day moving average. Just fact. But with that said, I don't have enough data to run a really strong backtest. We'll go ahead and do it. But yeah, I mean, here's what's up. At some point in November, something fundamentally changed to cause this massive spike, right? 500% spike. And while that's awesome, you can't really say that, oh, going forward, you know, cumulatively, this should show a 320% return. That's not realistic. And in fact, it's actually below its 10-day, so I can't plot it going forward. But my personal opinion on this one is, like I said earlier, nothing good happens below the 200-day. Let's take a look at CTRM. Hey, if you're finding this useful, please smash like. Oh, I'm sensing a trend here, ID Doc. Again, below its 200-day, had some sort of meme stock thing happen to it. It grew 1,100%. Totally normal market moves, right? Let's do a strategy test on it. 174% back tested on the 10-day. But like I said, realistically, I don't think that is a true, real gauge of what this stock could do going forward. But yeah, this is one, again, I would shelve for now. And last, Inge. If you're finding this useful, be sure to smash like. Oh, a SPAC bubble. That's what it is. Okay. All right. That's what these are. Yeah, same thing. Now, there's a chance that you may be holding it since this point. And if you are, I mean, you're basically defensive. You're on the back foot at this point. Really, honestly, it's a tough call. Let's say if you've been holding it for a while. There's every chance that these may never come back to those prices. So here's a couple things, couple of trader psychology things, right? If you finally take that loss, yes, it's realized. I was watching a seminar by Mark Douglas, who's featured in Stock Market Wizards or Market Wizards, and he was talking about one of the participants in the seminar. They said it's never really a loss until you sell, and I nearly like dropped my phone. Like, what did he just say? Yes, a paper loss is a loss. You're losing time that you could be moving on to the next trade. You're losing mental capital because you are wrapped up in the fact that this is underwater, and you're losing an opportunity cost because let's say if you put $1,000 into this trade, you may still be able to scrape out 200 out of it, maybe. And if you can take that 200 and put it to work somewhere else, that's the opportunity cost that you're not putting to work. So, like I said, nothing great happens under the 200-day line, but something could happen great for you if you take your loss finally, move on to the next trade. So ID Doc, I wish you the best. Let's take a look at Diz. Ooh, the mouse. Here is one of my rules of trading. Are you ready? I've actually talked about this on TV before. Never short the mouse. Never, ever, ever short the mouse. So let's take a look at this real quick. I will say this has some really interesting points. I'll give you a little hint. I did trade this and I got my stop loss hit. I got in on, I'm trying to mark it here. I got in on September 1st. I got out on September 3rd on a break below the 5-day exponential moving average, which is the gray line right there. So with that said, that was the line I was trading. So I'll go ahead and I will test that for you and you can see why I was trading that. Test. See on chart. Yeah, because yesterday it closed below that line, I can't produce the result going forward. But let's take a look at the result. 18% versus 85% asset performance. Like I said, if you were to have bought it 1,000 candles ago, you would have got an 85% return. We can't control that. We can only control our strategy. And this strategy, over and under, in this case, the 5-day exponential moving average, would have given you a cumulative 18% return with a 45% win rate, right? So your losses are much smaller than your winners, and that's what you want to see as a good trader, right? Keep those losses small, let those winners run. Yeah, and SPY is the American Holy Grail. All right, let's see here. There's a bunch coming through. I appreciate that very, very much. Life, please. Easy win, 1, 2, 3. I want an easy win today. Let's take a look at life. Oh, daggum. I'm from Texas. That's how we actually speak in real life. Negative 84% on the stock. However, if you ran above and below the 5-day, which actually I really prefer the 10-day, the 5-day could choke off trades that you don't mean to choke off. Look at that. Big difference, right? 45% versus 101% cumulative return. Easy win, 1, 2, 3. I don't know if you're in the stock, but if you were, you timed it really well. I assume if you bought it any time before the last 2 days. So yeah, here's what I would do in this case. Not financial advice, you do you. This is what I would do. Because the 10-day, which is this blue line here, shows to be a very strong return, 110%, or was it 110? 101% cumulative gain. I would let this run as far as possible. And what I mean by that is on the idea of trend trading, you need to let this run literally as far as it can and then turn back around, right? Let's go back to Netflix for 2 seconds. If you traded Netflix long, you could have let this run literally almost $100 per share, right? So don't try and take your, let me rephrase that. I would not trade and I would not try and pull my profits off early because this life does have legs. It's back tested well, and right now it has a lot of momentum with a lot of volume behind it. Somebody big just bought a whole bunch of shares and they want this to go. So I would be taking a very strong look at running on that 10-day exponential moving average. Like I said, you do you, but that's the way I would trade it. Nice work on that one. Easy win, 1, 2, 3. Antonio, I've seen you here a couple times before. I appreciate you coming back, sir. Make sure you smash like, by the way, if you're finding this useful at all. Sphere 3D Corp. All right. So first off, it's looking strong, right? It's at a nice bullish posture. Let's do a strategy test on the 10-day. Ooh, but here's where it's got some issues. Negative 57% following a over-under strategy on the 10-day exponential moving average. But additionally, the stock already is down 80% from 1,000 candles ago, which is rough. And then the strategy is not working on this stock. So this is one I would say, let's move on to another trade because I think that there are better opportunities out there for you, Antonio. By the way, if you are enjoying this, let Benzinga know by smashing like. ADW Techs, I bet you, sir, are from Fort Worth. I can see the stockyards in your avatar there. All right, let's take a look at this. VWE, Vintage Wine Estates. That sounds nice. There is an issue here. It's coming up into earnings. I like to trade up into earnings because, there's usually a nice run up into earnings I shouldn't say usually. A lot of times there are some nice run ups into earnings that you can take advantage of, but I personally wouldn't hold into earnings. That's just the way that I trade. Now, with that said, this does show a 19% return, which is pretty good, right? We've seen better and we've definitely seen a lot worse, but following the blue line, the 10-day exponential moving average on this chart here does show to be pretty good. It even shows a 57% win rate. I've been reading a lot of books. One of my goals this year is to read 100 books over the course of the year. Not 100 trading books, but a lot of trading books. And in there, just over and over and over, I'm seeing this theme of your win rate does not have to be crazy high, right? If you let your winners run and keep your losers short, that is going to make a drastic impact to so many people's portfolios, right? And it's almost the opposite of human nature, right? When you've got a loss, we want to just, give it some extra time to work. Maybe it'll work again, work for us. And when you've got a win, it's like, oh, I got to take the money before the market takes it away from me. And to be a successful trader, you have to overcome those human psychological barriers there. And once you do, you should do pretty well. So ADX, I appreciate that. I have time for one more. Then we're going to go to the next section here. Antonio, I already talked about one for you. I'm going to skip it. No offense. Michael, how are you, sir? Good to see you. Let's talk about Penn National Gaming. This looks rough. Remember, easy rule of thumb. No matter what stage of life or what stage of stock you're trading, nothing good happens below the 200-day moving average. This is below the 200-day. It has a lot of negative movement behind it. But it does backtest super well, 449%. So it does have legs. At some point, it may turn back around and it may work really well and it may capture a lot of buyers. But in the meantime, right now, this is a stock I would personally avoid. So, Michael, thank you so much for that. If you found this useful at all, please be sure to smash like. And hey, we're coming into the last section here, but I do want to let you know that if you're finding this useful, this is the kind of stuff that I do 3 days a week on my podcast. The easiest way to find that would be to go to your YouTube bar right now, type in 10-minute stock trader, and you will see my smiling face looking right at you, and you will know that's the right place. And we are literally 30 people away from 10,000 subs. And I know that we could do this today with the people who are on this live chat. So if you could please, while you're here, you don't even have to take off this video. Just go to the search bar, 10-minute stock trader. You'll be good to go. All right, so let's go into our final section here. This is our final thoughts. All right, I have two final thoughts today. Usually just one, but today I have two. First final thought comes from my friend Yvonne Baiji. Yvonne, I had on the podcast, and me and this guy clicked like that. I really enjoyed talking to Yvonne. Trading in a nutshell, 1% execution, 99% patience. You have to wait for your opportunities to come to you. Jack Schwager, he's actually our next quote here. You don't want to have a position on before a move has started. You want to wait until the move is already underway before you get into the market, right? You don't want to be guessing that, hey, this stock that I bought in the SPAC bubble that's worked against me, I don't want to put it back on unless it starts to move for me, okay? You need to let the positions tell you where they're going. And you can do that. Just look at any chart, look at any trend line, and say, this stock is saying it's moving up. I'm interested in participating when it moves up, but I'm not going to participate until it starts moving up. It's critically important that you wait, let the market show you where it's going to go. And I just love this quote by Jack Schwager here. And Jack is actually going to be on our podcast. I've already spoken to him. It's recorded, it's in the can, and it's scheduled to come out. And if you haven't already done so, be sure to type in 10-minute stock trader on the YouTube bar. And that way you will be notified whenever Jack's episode comes out. One of my very favorite things I got to do was interview market wizard Larry Hite a couple weeks ago. And that video, if you haven't already watched it, is incredible. There's a theme that he talks about there. Dude literally was my age. I'm 35 years old right now. Took a $500,000 trade, one trade, $500,000, and made $12 million from the one trade. And when I was reading his book and I talked to him about this in the interview, I set the book down and I had to go for a walk because I was like, I'm playing little kid games. Like there's a big world out there and a lot of people are doing a lot of good work. And I got to get my act together. So that was really cool to be able to interview Larry Hite. So like I said, be sure to subscribe since you're on YouTube anyway. Just take you 10 seconds to run over there. We're going to hit 10,000 today. If you could do that, and that would be awesome. And that way you won't miss when Jack Schwager's interview comes out. And hey, listen, if you found this useful at all, let Benzinga know by smashing the like button. Our goal, like I said, on this episode is to get 100 likes. I've gone a little long over time, and I apologize for that, but I think we've covered a lot of great ground today. So here's the key takeaway. The market's looking broken. It's fractured, and we need to have all of the stocks really come back together, work together, everyone joining in arms and working to push this market forward. It's not going to happen on the back of just a few stocks. And one green day is not going to undo the damage that we are seeing out there in the market. So, hey, if you found this useful, please make sure you subscribe to the 10-Minute Stock Trader YouTube channel. And you know what? Thank you so much for tuning in. I'll see you on the next episode. Okay, so what'd you think? That was pretty incredible, right? Now, if you liked that, that's only a taste, only a sample of what you're going to find in the full AI stock trading system. And I really highly encourage you to go and check this out. Obviously, you are interested in learning and how to trade, and that's why you're listening to this podcast. Now, I'm going to take and download my entire trading system that I use day in and day out onto you. And the only way I'm going to be able to do that is over at the AIStockTradingSystem.com. You're going to get phase 1, 2, and 3, several bonuses, and on top of that, I'm going to walk you through over a dozen trades that I put on inside of my account, holding your hand and showing you exactly how I got in, how I got out, how I use the artificial intelligence data, and how this could work inside of your own trading portfolio on a daily basis. So make sure you head on over to AIStockTradingSystem.com. That's AIStockTradingSystem.com to learn more and to get started and to download my decade plus worth of trading experience into your hands so you can start using the AI stock trading system today, the 5-step system to take the guesswork out of trading. Hey, if you like this video, let me know by leaving me a like below, and then subscribe and share it with somebody you think could use it as well. Be sure to comment below with your biggest takeaway from this episode and any suggestions you have for future episodes. And finally, make sure you watch these other videos to help you trade faster and trade smarter, and I'll see you on the next episode.